Okay, good afternoon. Okay, this is so loud. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everybody. Thank you for being here. Today we're going to welcome our friends from ZHAW. Zurich
University.
Zurich University of Life Sciences. Okay, yeah. Because I always say like ZHAW. It's just the acronym of the school. So today we're going to have the guest lecture delivered by Dr. Sandro Fuchs. I hope I mentioned your name correctly. So I'm just going to read a little bit about Sandro. So Sandro is focusing on public financial management, which is, so just to let you know, most of the students here are my students at the public financial management research class. So hopefully we're going to have a really fruitful discussion today. So Sandro also have plenty of research in this area, and as the deputy head of the Institute of Public Management, as well as the head of the Center for Public Financial Management, I'm sure there are plenty of things that Sandro will share with you today. So the talk will cover how to measure financial performance. So I think this is a big question that we want to answer when you look at the local government, when you look at subnational government, and how can you differentiate them when you look at their policy, and then how can you say that this policy is working? Usually in the corporate sector, we have several different ways to measure performance, and we can say a policy is working, or like an event has an effect if it affects performance. But it's difficult when it comes to the local government, to the subnational government, because there's no one good way to measure their performance, especially the financial performance. So today, Dr. Sandro will share with us the experience from the Swiss government. I mentioned to Sandro that we had one paper, remember, using the Swiss context, so hopefully you guys still remember. Maybe I'm going to ask that in the final exam, okay, so try to remember it, right? So you can discuss that later, and then there are plenty of things. I've seen the slides, and I think there are plenty of things that we will be able to discuss today. So thank you very much, Sandro. And with Sandro, I have my other two friends here who's been helping me with the fiscal database, so they know about Indonesian data really well. So maybe you can ask them a little bit about it. So I have Alma and Lucas. So thank you so much. And I have Arya, who's actually funding the project. So let's give a round of applause to Seiko and Zoe for being here. So without further ado, Sandro, time is yours.
Thank you very much. Do I need to use the micro for the guys who are on Zoom? Okay. Okay. No, first of all, thank you very much, Yuli. Very appreciated to be invited to have a guest lecture here, and of course also thanks to Seiko for funding the project. I would also like to welcome again Alma and Lucas, who did a very great job in our project. And I think at the end of my guest lecture, we will cover a little bit or share some insights what we actually discovered within that project, focusing on tax administration capacity to collect own source revenues. We will talk about resilience in that talk, and we're going to cover that it might be a very important factor when we talk about resilience. So just briefly, so we are from Switzerland, a research group focusing on public financial management in Switzerland, of course, but not only. We also have an international perspective. And of course, we do teaching and we do a lot of research, I would say globally, comparing public financial management systems across the world. So I think we got quite some international perspectives on that. And we are very happy to contribute some of these thoughts and reflections to the University of Indonesia. And the aim is basically, so the topic was given by Yuli, I think a very timely, a very interesting topic. And the idea is to give you just a brief introduction why we think, or why I think it is both important, focusing on financial resilience at the one hand, and on the other hand side, on the local government sector, and combining these two perspectives. And then I would like to focus on a rather, I would say, traditional way on measuring performance. Yeah, so we call it the balance sheet approach. I'm sure you have heard about that. And then secondly, trying to focus on the question, okay, when we try to look at financial resilience, and we will talk about that going beyond financial numbers, we need to go beyond financial numbers when we try to focus on organizational capacities to deal with crises, to absorb shocks, and we will try to focus on that, on how to do that. And then we try to apply some of these thoughts and perspectives on the context of Indonesia. I must say I tried that, and then you can challenge myself, or at least we got some stuff for discussions. We tried that, and then of course we tried to wrap up. So time-wise, I know 45 minutes, 50 minutes, and I think then we have also time for Q&A, if that's okay with you. Now, I would like to start with the following slide. And I don't know, maybe it is just a very central European perspective from Switzerland. I don't know whether you guys have the same feeling, but if you check the news, and I checked the news, very recently, I kind of a news addict, and then it, appears, that we kind of are in a very uncertain, shaky world. Yeah, so we have to deal with, multiple crises, poly-crises. Yeah, if you read academic research, and we are dealing with, just to name a few of them. I mean, them, climate crisis. We have tariff wars. We have physical wars. We just escaped a pandemic. Yeah. We had the great financial crisis in 2008. So it kind of feels that we live in a very, very uncertain world, and that uncertainty is kind of rising. So I'm not sure whether you share the same perspective here in Indonesia, but at least that's how we feel somehow in Switzerland. And if we look at the recently published paper, Fiscal Monitor, by the International Monetary Fund, they somehow come to the same conclusion. So they kind of state somehow, and they usually have a very global perspective. So they say, okay, global uncertainty is on the rise, and they ask a very important question, namely, how should we actually deal with that from a fiscal policy perspective? How should we actually build our public financial management systems in a world which is very, very uncertain? I think this is a very important question. Now, from a political point of view, politicians are usually not very good in dealing with uncertainty. Usually what they do is they create uncertainty by their decisions, but they are not very good in dealing with that. They're maybe dealing with fears of citizens, but they're not really dealing with uncertainty, because as we know, politicians might have a very limited time focus, and they might focus on getting re-elected. So they don't have, huge political incentives to deal with, issues and events, developments, which create basically uncertainty. From a technical perspective, so if you look, for example, at public administrations, public sector entities, and we did quite a large research project in Switzerland. So if you ask public administrations, how do you actually deal with uncertainty? We kind of came to the conclusion that, in many times they are rather reactive than proactive. So if you look at risk management procedures, standardized risk management assessments, or business contingency plans, some governments and entities have that, but I would say there's still a big capacity lack in dealing with, I would say, standardized risk management assessments and so on. But the problem is, if you are not very good in anticipating, future developments and potential shocks and threats, we know from data, the slide before showed that from time to time, a crisis, an economic shock, a pandemic will happen. And the second problem, or the third problem from a fiscal policy point of view, what happens if such a crisis or adverse event happens? Everyone is pinpointing to public sector entities, governments, and telling us or telling them, you need to deal with that crisis. Now we have a crisis, we as a corporate sector, we cannot deal with that, we need solutions from you. Yeah? And what happens from a fiscal policy perspective during crisis? So we look at the recent pandemic, public sector expenditures go up probably, yeah, we need to increase health spending, different types of expenditures, and revenues go down, yeah. So if you don't have the fiscal capacity, fiscal space, or fiscal slack, as you can read in academic papers, to deal with that, you're not going to deliver very good crisis management, because it costs money. Now, the bad thing about that, if you look at the fiscal capacities or the fiscal slack from a global perspective, so I'm not talking about particularly the Indonesian context, but from a global perspective, there is only one direction in terms of increasing debt to GDP, yeah? And there's only one way, going up. And you might have heard about the fiscal ratchet effect, which is there is a crisis, debt goes even further up, but does not reduce after the crisis, and there is no turnover in sight. So from a global perspective, I severely doubt that there is very sufficient capacity and fiscal space to deal with multiple crises in the future. Now, Indonesia, we will talk about that, I think is some way better off because your debt to GDP is quite limited and quite low compared to even other peer groups in the region compared to the US, Japan, and so on. So we might argue that Indonesia is somehow better off in a sense that you still have borrowing capacity. Now, the IMF comes to the conclusion that governments, especially national governments, need to work on the financial resilience in a way that better understanding on how to conceptualize and how to operationalize and understanding financial resilience. Now, of course, this is very, very important, but the problem is the IMF, the World Bank, OECD, a lot of international organizations, they do a very, very good job. They have many very helpful working papers on that, but the problem is they are focusing very, very much on the national level, yeah? And they somehow exclude, in many ways, subnational governments. That's why I come to the second point. So I say and I argue, together with IMF and World Bank, that working on the financial resilience is important, but we need an approach for the local governmental sector. So you have very, very beautiful islands, and unfortunately, we don't have that in Switzerland, but we at least have mountains. But why do we think, or why do I think it is very important to not only think about resilience at the national level, but particularly at the subnational level? One reason is because a lot of service delivery, is actually conducted by, or local governments are actually responsible for quite a huge part of local service delivery. Now, I don't have the exact numbers for Indonesia, but I can tell about Switzerland. So in Switzerland, 2/3, so 65% of total government spending is actually allocated to or attributed to the subnational level. So in Switzerland, we have a federal system, we have the national government, we have states, provinces here, and then we have municipalities. So 65% of the spending or of the responsibilities for public service delivery relies to the subnational government. And I think the island is a very good illustration of that. So the island is responsible to serve the people, the citizens of that tiny kind of landmark. Yeah? And if a crisis happens, we cannot wait for the national government to come. No, we have to deal with it very, very locally. Yeah? Now, the problem is that in many, many countries, and I think Indonesia as well, as we will hear, you bear a lot of, or you delegate a lot of responsibilities to the local government sector in terms of service delivery, but at the same time, these local governments, they don't have the fiscal autonomy, yeah, to kind of raise or collect their own taxes, making them very, very dependent on national transfers. Now, from a financial resilience perspective, this imposes huge financial risks because I cannot control central government tax decisions or transfer spending. But if I am responsible to deliver the service and I cannot control my kind of revenue sources, this is not very resilient, or other way around, this imposes some financial vulnerabilities. At the same time, many governments or local governments, they have huge restrictions in terms of borrowing. So taking on, loans, for example, which even more hinders their financial autonomy. So to conclude this introduction, we think that it's very, very important to think about financial resilience, not only at the national level, but at the subnational level. Yeah, and I think we need to invest way more academic thoughts, yeah, in order to understand how to conceptualize and to operationalize financial resilience. Because we think it will be and it is important to deal with future crises, and they will appear. Yeah. We know that since the very famous book of Nassim Taleb, The Black Swan, you might have read it, that at some point of time, a crisis will happen. We cannot anticipate, we cannot mitigate, but we have to deal with it. We need to absorb. And for that, we need financial means to do so. I would now like to focus on two possibilities to think about. One rather traditional way to measure the financial performance, that's the balance sheet approach, and then moving to the concept of financial resilience based on our experience in Switzerland before concluding or adapting the thoughts on the context of Indonesia. Now, what is the most important thing when we try to measure the financial performance of a local entity? So in Switzerland we have a saying, das Papier ist alles, the paper eats everything. So you can calculate and you can, do all these, very fancy calculations and come up with financial measures and ratios and so on. But if the data is not reliable, it does not help you anything, right? So the most important thing when trying to assess the fiscal condition of a government or governmental entity is having reliable data. Yeah. Yuli mentioned that before. So in the corporate sector, we have very standardized rules on how to do accounting. Yeah? So you might have heard about the International Financial Reporting Standards, IFRS. So you need to apply them if you, for example, want to get listed at the stock exchange, right? In the public sector, you have, as many systems as there are countries. Now there is one, I would say, initiative or global initiative. You might have heard about the International Public Sector Accounting Standards, the IPSAS. So it is a global initiative to harmonize accounting across jurisdictions worldwide. But the problem is, it is voluntary, because there is nothing like a stock exchange where public sector entities can be listed or should be listed. So basically, it is voluntary. Luckily, we will see that later, already a quite substantial part of jurisdictions, countries have actually moved to accrual accounting. Now, what we know is from the research, and I think the research is quite clear, jurisdictions which actually stick to accrual accounting, they do better in terms of accountability and transparency. There is a negative relation to corruption. So the more transparent you actually report, the less corrupt the country or a jurisdiction is. And there is also some research focusing on the relationship between higher fiscal transparency and better and higher fiscal sustainability. In sum, we can argue that I think it would be beneficial for jurisdictions, governments, if they applied some sort of accrual accounting, if they increase the financial accountability, because also from a public value perspective, it reduces corruption and it leads to better fiscal sustainability. Now, I have mentioned it before, if you look at the global landscape, so if you look at the jurisdictions which have actually applied accrual accounting, we see quite a heterogeneous picture. So first of all, what we see is some green countries, including Indonesia. I think Indonesia was actually one of the quite early adapters of accrual accounting. So it kind of came from the east side. So we have Australia, New Zealand being very early adapters. We have Indonesia, and then if we go and move towards Central Europe, of course, Switzerland, Spain, and then we have quite huge adaptation in North America and Latin America. There are quite some gaps if you look at Central Asia, if we look at some African countries, some even no data available. However, we need to acknowledge that this only takes into account the national level, but not the subnational level. Again, there is a lack of data when focusing on the subnational level. So we can conclude that in many countries there is still a lack of reliable data, which makes it very complicated when measuring the financial performance. Now, luckily, we are here in Indonesia and we are from Switzerland, so we are green, so we can assume that at least there is some sort of reliable data and we can move on with this lecture. Now, the good thing about accrual accounting, and I think the big difference, of accrual accounting compared to cash accounting is we produce a balance sheet. So the balance sheet as the basis, and in that view of the International Monetary Fund or the UK experience, a very important instrument to steer and govern financial management practices of public sector entities and governments. Now, I mean, just some basic accounting, I'm sure you all know that, but I think it's very important when we then try to figure out how to measure the financial performance. Now, what I can advise you as students and maybe future advisors of ministries and ministers, whatever, I think it is very important to never lose sight of basic accounting relationships. Because what I can tell you from our experience when dealing with policymakers and decision makers, most of them don't really understand, how everything is connected, and they kind of come up with some very weird ideas where you need to kind of, sometimes need to stay back. Does it really make sense? So I think it's very important to know the connections. Now, what I said is, the good thing about accrual accounting is it kind of forces governments to come up with an opening balance sheet. So what happens if you do an opening balance sheet? What do you need to do? You need at first record your assets, right? So you have current assets and you have non-current assets. And governments around the world, they have plenty of assets, Not only financial assets, but particularly non-financial assets designated for public value purposes. Such things like buildings, roads, medical centers, schools, and so forth. In Switzerland also a lot of army inventory, But usually when, the Swiss government tried to do the opening balance sheet, they couldn't find some of the tanks, they got lost, and, they were like, oh, just, depreciate them. It sounds funny, but it was really the case. So it forces you to kind of take stock, to account for your assets as the basis to know what you actually have, to see in what type and what kind of conditions these assets are, and as the basis maybe for better asset decisions, life cycle management in the future. So that's one thing. The second thing is you also need to take stock of your liabilities. Yeah? And by that I don't only mean financial liabilities like loans from banks. No, we are also talking about pensions, pension obligations in the future. Yeah? And I think that kind of exercise, and I tell you, it is not about the financial number at the end of the day, it's about the process, getting stock and to come up with an opening balance sheet. Now the balance sheet is your financial memory, because it's stock, so it remembers any financial decision you take from the past, and also with respect to the future. So it is your financial memory. While the cash flow statement and the statement of financial performance, you net them and you start from zero with the beginning of a new year. Yeah? So these are flows. Now, of course, and there is this huge debate, in academic research, and Yuli might know that, and maybe you also have discussed, what is better? Is it cash accounting or is it accrual accounting? Yeah? And I don't really understand this dispute because, in my view, you need both information. Yeah? Politicians, they probably rather understand cash flows. Yeah? They understand cash in, cash out. It's very easy. Yeah? But I think from an academic point of view, both type of information or all three statements or elements of financial statements are of equal importance. The balance sheet is your financial memory. The cash flow statement tells you what comes in, what goes out, how much free cash do you have to invest for investments, and what is your financing activities, how much do you actually need to borrow to finance your investments. That's the cash flow statement. At the end of the day, it basically explains the net increase or decrease of your cash equivalents in the assets position. It's connected to the balance sheet. On the other hand side, we also have the accruals, the statement of financial performance, which includes, of course, cash in, cash out, but because we have actually taken stock of assets, we also need to depreciate assets, sometimes we need to impair assets, so we have non-financial transactions, or maybe we have stock valuation, revaluation gains, so we include them also in the statement of financial performance, and at the end of the day, it explains you the change of your net assets and equity over time or over the course of 1 year. And again, my advice, although it sounds very, very basic to you, I think it is very, very important to always remember these very elementary relationships, especially then when dealing with fiscal policy considerations. Now, I said, okay, the balance sheet offers some very, I would say, exciting insights when talking about measuring the financial performance. So the balance sheet approach is promoted by many countries, actually. So we have New Zealand, for example, with their well-being approach, based on a balance sheet approach. We have the UK, we have Canada. We now also have Switzerland going that direction. But what you need is kind of a very, I would say, comprehensive balance sheet, which then gives you a lot of very important information about the fiscal condition of your public sector entity. If we start on the asset side, of course, there is one important question: what kind of financial risks are associated with your financial assets? Because sometimes governments, they invest in foreign currencies or they help foreign currencies. Sometimes they even have cryptocurrencies, they invest in, stock markets and so on. So I think it's a very important information, know what types of risks are associated with your particular financial assets. I think that's one. The second, on the non-financial assets perspective, I think it gives you an indication how efficiently are you actually managing your non-asset portfolio. So the amount of depreciation over a year or the impairment over a year gives you some sort of indication whether you're actually efficiently using or managing your assets or not so much. On the debt side, of course, one very big question of economists and accountants is the question, what is a sustainable level of debt? And I can't give you an easy answer. I think there is a huge economic dispute about that. So many economists basically take the debt and they compare it to GDP, for example. I think what we need to consider always is, when talking about debt, it's always associated with interest payments, so you need to pay interest to banks or whoever the lender of the money is. And the bigger the debt, the higher your interest payments potentially, the higher your refinancing risks associated with that. And last but not least, if you deduct the liabilities from your assets, best case, you have positive net assets, you have equity. I think the equity is a residual value which could be used also in terms of your financial health. And if you look at the Indonesian municipalities, I think you have very, very high equity ratios, because your debt levels are very, very low. I think that is very particular for Indonesia. I can tell you it looks completely different in Switzerland. So we have many, many municipalities which are struggling with almost negative net assets, so meaning liabilities exceeding their assets, which is not a very good sign. But luckily we are in the public sector and not in the corporate sector, because if you were in the corporate sector and our liabilities would exceed the assets, we would probably need to file our annual accounts and go potentially bankrupt. So in conclusion, the balance sheet approach, I think is one, I would say, rather traditional but very important idea to conceptualize the financial health, the financial condition of a given public sector entity. Now, I wouldn't advise you to do that. So I recently joined a public sector conference in Europe, and then I had to review a paper. I mean, the paper in general was very nicely written, and I like the authors much, but I wasn't really a big fan of what they did. What they tried to do is, they tried to come up with a financial condition index. And what they did is basically, they just kind of compiled every possible financial ratio they kind of could find and kind of put it in a mixer, and then they mixed it and they come up with some figure of financial health. I wouldn't advise you to do that, because at the end of the day, what can you tell about the figure or the number which comes out? I mean, what is the implication? So I would advise you more focusing on things you can explain, and measures which make sense in the context you're dealing with, instead of just trying to mix up every single financial ratio measure you could find. So whenever you need to write a paper or an essay or whatever, please, I wouldn't advise to that. Less is more. Make sure you know what to measure, and you know potential implications, and you know, most importantly, the relations and also the trigger points and how you could actually change the indicator. Now, this is a rather traditional, but I would say a very important idea or approach on how to measure the financial performance of a public sector entity. Now, to go one step further, and now we want to focus on the perspective of resilience. Yeah? So as Yuli introduced. Now the key question is, how do we actually move from, I would say, a rather short-term financial analyzing, focusing on balance sheet information, cash flow, statement of financial performance, to a rather medium to long-term perspective, trying to capture the resilience of an organization or the financial resilience of an organization. Now, we have conducted quite a large research project in Switzerland. So again, Switzerland has roughly 2,050 municipalities. And all of these municipalities, they enjoy a very high fiscal autonomy. Yeah? And there are quite strict no bailout rules or no bailout clauses from the states and the national government. Meaning, the local municipalities in Switzerland, they are responsible for their financial performance, but also for the service delivery. And of course, we can say that it quite closely connects financial performance and your ability to provide services. Because if you don't have money, it's very difficult to provide public services. Now, we entered in various discussions. So we worked closely with 5 municipalities, but we had way more interviews. We also had interviews with consultants from PwC, BDO, you know these big consultancy firms. And we also had interviews with superior authorities, so state level, in order to understand, okay, how can we actually better grasp the ability of a local government to be and to face these potential external threats and potential risk associated and to create fiscal buffers. And I think one of the key points we learned is that maybe you have seen on the picture, maybe live, an iceberg, and this idea of an iceberg, so where only the tip of the iceberg is actually below, is actually above the sea, or whatever, the water, and then there is a very big part of the iceberg below the water. I think we kind of find out the similar principle. So when we talk about financial resilience, or things we did before, trying to understand the fiscal position, we are actually only dealing with the tip of the iceberg. Yeah? So we can actually climb the tip of that iceberg, and we can do all this financial analysis and come to the conclusion the financial situation of a given municipality is very bad. Now, what do we do with that kind of information? Yeah? Of course, we as accountants can tell, or as advisors, researchers, professors, we can tell the ministry or the decision makers, hey, your financial situation is not very good. But, what shall we do if they say, okay, thank you very much for the information, but, I think financial analysis is important, but it's just the tip of the iceberg. If you want to build resilience, we need to better understand and we need to dive deeper. So we need to kind of go beyond the water and see the iceberg, meaning we need to deal with organizational capacities, so talking about public financial management systems and processes, so budgeting system, financial planning systems, maybe fiscal rules, and most importantly, we need to understand the financial culture and the decision and sense-making processes of people, politicians involved. So we can do a lot of analysis here, we can have the best processes ever, but if decision makers just decide to spend more money than they actually collect revenues, you do not work on your resilience of the organization. So The problem is that accountants are not the best storytellers, right? But we need to be better in storytelling, in kind of convincing and dealing, negotiating with decision makers to change the culture of an organization. So I think we firmly believe that the culture of an organization explains a lot in terms of, the capabilities in dealing with uncertainty or not dealing with uncertainty. And we were quite amazed in Switzerland. So in Switzerland, we were dealing closely with 5 municipalities. 2 of them appear to have a very, very strong, and I would say even good culture of financial management. So meaning the Ministry of Finance, they had a very, very good reputation. So people kind of in other line ministries, they like to talk to the finance ministry. Because somehow they listened to them, somehow we could discuss with them, somehow we could find solutions with them, and which actually improved the financial culture. Yeah? In 2 other cities, and by accident, these other 2 cities, they are very struggling with high debt levels, so we could actually argue that they are in a very, financially in an unsustainable position, not very resilient. We found out that the financial culture, and of course, it's just very, very qualitative research, so it's by no means, I would say, very representative results we found, but it gives you some indication in which direction it goes, yeah? And academic literature actually supports that assumption. Now, what we found out in these other 2 municipalities, which are actually struggling with their financial situation, is that the financial culture was somehow very, very complicated. Somehow they appeared not to trust the finance administration really much because they had, various austerity programs running, or in the past they had austerity programs, so it somehow was really complicated, and somehow, they couldn't convince line ministries to take more clever financial decisions. I think at the end of the day, this is a story about financial resilience. Yeah? If you want to focus on and get better and develop organizational capabilities to better anticipate and better cope with external shocks, we need to dive deeper and we need to create processes, rules, an institutional framework, and a culture of people who take smart decisions, smart financial decisions. I think this is a very, very important story and lesson learned from the Swiss experience. And I'm very much looking forward then to the discussion, whether it resonates with you, yeah, or whether this perspective might be completely different in Indonesia. Now talking about Indonesia. Now we had a few thoughts about, the importance of financial resilience. We talked about the balance sheet approach. Now we had a broader, wider look focusing on the financial resilience, where we said, okay, we cannot only do financial analysis, do our accounting stuff. No, we need to get better in storytelling. We need to better understand and design processes which moderate even maybe bad decisions at the micro level. But the best way we can do is we need to get to the people, to the line ministries, talk to them, and we need to persuade them or convince them to take more clever financial decisions. Now, how does it apply to Indonesia? Now we start again with this financial analysis, because we just have this data and we don't have a lot of qualitative data about Indonesia, but maybe we have room for discussion afterwards. So if you just look at the debt level, yeah, in Indonesia, we must say, on an aggregate level, so total public sector debt compared to GDP, Indonesia is quite, well on track. It does not say anything about service delivery, so it's just financial buffers. But financial buffers seem to be there, because currently debt is roughly, I would say, 40%, which is very, very low, yeah, from an international perspective. And I think it increased a little bit during the COVID pandemic. That's what you see here. So that's what we said before. During crisis, debt usually goes up. But I think very good to see that somehow it remains stagnant, you know, after the crisis. Yeah, in many, many countries you see, you know, debt goes up after a crisis and continues to rise afterwards. So from that perspective, I think Indonesia seems to have some financial buffers. Your fiscal rule is very much aligned to the European system, so the Maastricht criteria and the European Union. So maximum 3% deficit compared to GDP and maximum 60% of government debt compared to GDP. So this very much aligns to the fiscal rules or framework we have in Europe. Switzerland does not belong to the European Union, so we have a slightly different framework. But I think we can kind of relate to that. Now, as I said before, Indonesia, compared to other countries, has very, very low government debt. Yeah? So if you compare it, for example, to Japan, yeah? So Japan is the most indebted country in the world, yeah, for different reasons. But also if you compare it to other countries in the region, Thailand, Vietnam, and so on. So I think from that perspective, very sound financial management. Yeah? I think Switzerland is doing equally good in that perspective. So that's why we're in Indonesia and from Switzerland. So in a way that yeah, kind of resonates probably with you and also us. Now, debt is obviously not really the problem. Yeah, but I think every country faces its distinct challenges when it comes to fiscal management. So what is the challenge in Indonesia? We believe, and that's also why we are currently conducting a research project, I think that one of the problems in Indonesia is a very, very low tax to GDP ratio. Now you can say, okay, fair enough. I mean, why is that bad? We don't like to pay taxes, right? Yeah, fair point, I agree. But I think there is a correlation between the ability to collect taxes and also the ability to kind of deliver public services. Because, you know, and we all understand accounting, yeah? So the debt somehow is not really much rising, it's rather declining, meaning that you are borrowing very, very little, yeah? Yeah? So you're not relying on external funding, yeah? Which means then, but when your tax to GDP ratio is low, yeah, it must mean that your expenditure ceiling is also quite low, yeah, because otherwise your debt would increase, yeah. So meaning, although you kind of collect not so much taxes, it means that you're also not able to, you know, to provide, you know, a very big public expenditures, yeah. So I think that's particular a problem, and that's also why I think the Prime Minister sets out the target to kind of increase the tax to GDP share over the next years by 10 percentage points, currently staying at 15. And if you look at the OECD average, it's roughly 30%. Yeah? So I think the main issue in Indonesia from that perspective is the ability to kind of collect somehow sufficient taxes, which then again transmit into public services and public service delivery. So this is the aggregate numbers, and now this connects to the project we were just disseminating today morning with the local level. Yeah. So when we talk about financial resilience at the local level, I stated it in the introduction. I think it is very, very important to focus on the question, okay, if the local governments bear a huge responsibility in service delivery, they need ways to finance that public service delivery. And if they rely too much or too heavy on national transfers, it reduces, of course, their fiscal autonomy because they cannot control this financial flow. So from a resilience perspective, it makes sense to focus on the capacity to increase local service local tax mobilization, because then I can somehow I can control the tax rate, I can control the process to collect taxes. So it just makes way more sense from a resilience perspective. So that is why, together with the University of Indonesia, we try to set up a fiscal database to better understand how local governments in Indonesia are actually doing in collecting tax revenues. And we published preliminary results in our fiscal brief, and I just want to go, 3 main points what we learned from the data. And I think it has huge implications then when we kind of relate that back to the idea or to the concept of financial resilience. Now, the first point here is that, and I think that's the main statement, overall, the ability to collect own source revenues in Indonesian municipalities is quite low. It's quite low. Compared also to, I would say, international average. So the average municipality collects roughly 10% of their total revenue from own sources, while being dependent up to 90% from national transfers. Again, from a financial resilience perspective, this imposes huge financial risks, because again, I cannot control these flows. Now compare that to Switzerland, which is also a federal country. The municipalities have significantly higher own source revenues related to total revenues, roughly 70 to up to 80, even 90%, so very, very high. So if we compare that to Indonesia, significantly higher. We do this, as good in terms of public sector debt, but in Switzerland, I think the ability to extract local revenues is higher. So what you also can see here on the map is that there exist differences between regions and between municipalities. We see the more purple or orange the municipality appears, the more their ability to collect own source revenues. The more yellow, the less their ability. And we still don't fully understand all drivers and forces behind municipalities' ability to do so, but it seems that somehow in ZHAW region and also here in Papua, they seem to be better in collecting own source revenues than in other regions. So a first assumption is that kind of bigger population or bigger density of population helps. Maybe it transmits into better tax administration capacity to do so, but I think we are still kind of exploring, the forces and drivers behind that. But, to conclude here, I think overall the ability is rather low, to collect own source revenues. However, there is a positive story. And the positive story is that over time, the data tells us, so if we compare 2013 to 2023, so over a time span of 10 years, all municipalities in all groups do better. So all municipalities are able to increase their share of own source revenues. But as you see on the slide, the gap is somehow widening. So the top performers, like top municipalities, which extract up to 25% of own source revenues, they do, better and better, while, the lowest tier here, or the lowest cluster remain quite stagnant. So there is a widening gap. Again, I think we are still exploring, trying to understand what kind of leads to these kind of dynamics, to understand, what kind of municipality is in which group. But I think from a macro level analysis, we can say there tend to be an increasing and widening gap. And last but not least, if you look at the budget credibility of local governments, so budget credibility is very, very important. So it's important to kind of forecast correctly or precisely forecast your next year tax revenue, because usually expenditure ceilings are related to your tax forecast. So if your tax forecasting is very, very bad, your expenditure ceilings or expenditure levels might not really adjust or make sense. So if you look at the data, you see that 70%, 70% of municipalities collect less taxes than they actually predicted or forecasted in their budgeting system. And some of them do significantly collect less taxes. So of course, from a public financial management viewpoint, I think this, is an area for improvement. You remember the iceberg, so this would be on the second meso-organizational level, so budgeting system, budgeting planning, financial planning, and financial forecasting. But we also see here on the graph that, some municipalities, a very tiny share, are kind of overperforming, so they collect way more revenues, than they actually predicted for in their financial or in their budgets. Of course, we can now come up with some policy ideas, potential policy implications. So if you want to apply the thought of financial resilience or the concept of financial resilience based on that data, and it's macro data, so I think we still need to investigate further, to explore further, doing more qualitative research in order to better understand the processes and culture of different municipalities. So we don't have that data, but what we can say is, if Indonesia wants to continue, and this is a policy choice, if Indonesia wants to continue that journey towards greater fiscal decentralization, I think authorities or you as potential future advisors should think of how can we encourage and how can we support local governments in Indonesia to get better in collecting own source revenues. Again, we still don't know, is it a matter of skills? So the skills are not there, so people don't know how to do it. Is it a lack of data, that tax registers are not there? Is it a problem of the huge informal sector? Is it a lack of data integration? And so on. So we still don't know, but we see there are differences. And I think this also gives room to kind of maybe even leverage in-country peer groups, because apparently some of them are doing quite good, or at least significantly better than others. So I think it would be very, very beneficial to bring them together, to learn from each other, and to ask, how do you guys, what do you do better than we are? So kind of encouraging this in-country peer group learning. And from a technical perspective, I think there is room to improve the budget credibility or budget reliability with respect to tax forecasting, to make more precise predictions for the future, because I think, again, there is a direct link to public expenditures and that also service delivery. So if you're not very good in predicting your revenues, you're probably also not very good in kind of setting, meaningful expenditure ceilings, which then again transmits into public service delivery or inability to provide public services. So now with that, I would like to conclude kind of the guest lecture, and I understand that we have time maybe for some critical questions, critical feedback. I don't know whether this makes sense, resonates with you. But again, Yuli, thank you very much for the opportunity to hold a guest lecture. And I think and also my colleagues, Alma, Lucas, we remain at your disposal for a Q&A. And looking forward to receive your inputs, feedback, questions. Thank you very much.
thank you, Sandro, for the presentation. So I will probably give the floor to maybe students who want to ask questions. Usually very shy.
Same in Switzerland.
Oh, really? Yeah. Yeah, don't be shy. So maybe I will start with, so Sandro, you show us like the part of the paper showing various measures of the financial indicators, and you say it's probably not a good way to kind of explain that. So I think one of the problem of students trying to build research questions about the financial condition is like what measure should be used, especially because like most of them are doing this qualitative because they're in my class. So I'm like a really qualitative person. So we do like what dependent variable will be suitable if they want to like measure like the impact of the policy or like some characteristic of the government. So the question will always be what can be the dependent variables, because if you look at the literature, there are like so many of them. And like you say, it's in different contexts, sometimes will have like different measures. So what will be your suggestion for like students trying to build a proposal looking at the financial indicator? What will be the suggestion looking at like the condition like that?
Yeah, thank you for the question. I mean, again, I think there is no general answer. I think, yeah, as you said, it depends on the context. And I think I certainly wouldn't recommend to do it like that. I think, as I said before, I think it's very, very important to kind of understand the relationships, how everything relates. And I have prepared, I think in the so this slide could be, I don't know, very useful to kind of understand, the interrelationships. So what we did here is basically, I think it's always very important, I think it's always very important when you try to set up the research questions that you are actually distinguishing between, what can you control, so what kind of flows can you control, and what is basically what results, what is the financial consequence. Yeah? So probably if debt is going to be a problem, financial debt, if you do it, maybe not in Indonesia, because I think in Indonesia it's less of a problem, but from an international perspective, I think then of course one of my most suggested indicators will be the ability to generate a positive operating cash flow, meaning that you have the ability to generate sufficient own source revenues or sufficient revenues, and then you basically cover your consumption, your annual consumption, so your cash expenditures, and the difference leads to an operating cash flow. And with that operating cash flow, you should be actually able to fund your investments. So I think you probably know the distinction between consumption, so you spend maybe, you pay a salary, you pay a wage, so this is basically government consumption, and we need to distinguish that from government investments. And of course, you should be able to cover your government consumptions, with your revenues, and then you should generate your sufficient operating cash flow to fund your investment. Because what we know also is that basically investment is often driving debt, which is okay, because if we invest, it might give us a future benefit. If we build a new road, cars can drive, and it might contribute to economic activity, so that might be fruitful economically wise. So in that sense, it could make sense to borrow to build that road. However, if we just, indebt ourselves for consumption, so for example, to pay salaries and other consumption, after 1 year it's away, it's gone, but the debt remains. So I think that is one potential avenue to explore better, distinguishing between consumption and investment. And in my view, the operating cash flow is one very important measure with respect to kind of trying to to measure the financial performance of an entity. But again, it's very, very context specific, and it's always related to what is the underlying problem. Is the problem debt? Is the problem, negative net worth? And then it requires different approaches also from a financial measurement side.
Thank you. Any follow-up questions or any questions you would like to ask? I can see some of my students who's like writing theses about public sector. Maybe you have something to ask?
Thank you, Mr. I'm so interested for this topic. I want to ask you about how about your opinion that in Indonesia, especially for municipality, very depend from transfer of central government in the terms condition that the transfer from central government is decreased, and the municipality need to pay their debt in condition. What is your opinion? Thank you.
Yeah, thank you for the question. I mean, as I tried to mention, and I think our thinking goes into that direction. I think from a financial resilience perspective, you want to control as much as possible. So what you can control is usually your expenditures. I spend or I don't spend. But the problem is that politicians, they usually want to spend and not kind of, but at least you can control, Now, if you're responsible for, quite important public services, schools, roads, medical stuff, of course, we also want to make sure that we can kind of control, our financial means to provide these services. Now, in Switzerland, we also have the discussion. So, there are some municipalities where they, still depend quite significantly on fiscal equalization. Because there are municipalities, they are in, less resource-intensive areas, so they collect less taxes, and then they get money, from, I would say, the richer regions. And when we talk with them about, financial resilience, we also argued that, hey, you kind of need to increase, your own source revenues, otherwise you're very, very dependent on that fiscal equalization transfers. And I know that, it might be, from a political point of view or from an administrative point of view, very, very easy to say no. I mean, this money is flowing in, so national transfers are flowing in, agree, for that year and maybe the next year. But it's always subject to change, subject to, political decisions not to pay as much anymore, to reduce it, and so on. I think from that perspective, it makes sense to ask yourself the question as a municipality, what can we do to increase as much our fiscal autonomy as possible? Meaning, we need to step in, we need to tax, we need to collect revenues to make us less dependent from, central government transfers, because it imposes a financial risk, because we just cannot control it. And I think resilience is, most of it about control. I think I know whether this answers your question. But, thank you.
So
And Alma, Lucas, if you want to add.
So Sandro, can we use like the proportion of transfers as a measure of like financial, the fiscal resilience? Like, I think the less will be more.
I think it's always, resilience or vulnerability. I think the resilience would be I think in Switzerland, or like one of the indicators we developed in our assessment framework is the share of own source revenues. I think this is one. And the other one is kind of the diversification of your tax base. So where does your tax income or revenue come from? Is it one company? But if the company goes bankrupt, you don't have any more revenues. And how diversified is your tax base? I think that would be another measure of resilience. So the more diversified, the more resilient. The less diversified, the more vulnerable. Same is true, the more you actually are collecting from own source revenues, the more resilient, the less, the more vulnerable. I think that could be one way to approach it, yes.
Revenue diversification, right? What? Yes, as well.
Okay, thank you. My name is Leon, and I would like to know about your opinion regarding to how the corruption affect the government's ability to collect the tax. Because actually in Indonesia, like there is some projects that government has been spent some the money for the project, but like actually this project for increase the tax collection, but actually it's not really usable right now, and so it's quite like seems that some people use that for make some fraud for taking some money for their benefits. So how about your opinion about that? Thank you.
Thank you. I think a very, very important question. Yeah. I try to answer. I'm not sure. In my view, the more corrupt a government is, I would say that kind of negatively correlates probably with the incentive to pay taxes, or it positively correlates with the level of tax evasion. Because I think a very, very fundamental concept is, if I trust that the government actually uses the money and spends the money efficiently and effectively, it kind of triggers maybe my motivation or influences my motivation positively to pay taxes. I think this is one reason in Switzerland where government trust is still quite high and tax evasion is quite low, because we assume that the government manages public finances very well, and we see that they kind of deliver public services. Yeah, so the trains are on time, and schools are working well, generally speaking. So I think it negatively influences. Yeah, so I think the more corrupt a government is, but I think at the end of the day, it's not about how corrupt the government is. I think it's about the perception. So do I perceive the government to be corrupt? If yes, then probably it negatively affects my motivation to pay taxes. So I would go in that direction. But I know Yuli or colleagues have a better answer. Yeah. A great question. I think it's very, very important. Yeah. I think from if you frame it more, I would say, I think focus on corruption is a negative frame. If you frame it more positively, I think there is a lot of evidence in the literature you can find about a positive relationship between greater transparency and accountability and also higher fiscal sustainability. And of course, higher fiscal sustainability might also be a proxy that people actually pay the taxes and don't evade. So that would be a positive frame. Yeah.
Any other? Yes. They usually shy at the they usually shy.
Okay, so thank you for the chance. So here I am Olivia. I want to ask one of the paper that we discussed in the class before. It's about how to evaluate the effectiveness of the public of the public budgeting itself. So in public budgeting, evaluating the effectiveness of spending is a little bit challenging for us. Like how to measure the health budget may result the more health budget may result in more services delivered, but does it means that people are healthier? And then maybe another example in the higher police budget may fund more operations, but does it means the communities are safer? So so I think that there is a contradictions. Fundamental question about how to measure success in the budget, budget spending for government. So how can local governments design a performance-based budgeting, go beyond counting activities or spending levels and instead reflect real improvements in citizens' well-being? Thank you.
You're very, very clever students. Yeah, I fully agree. I think it's a trade-off. I think from a public financial management perspective, you might have heard about the PFA framework, so the Public Expenditure and Financial Accountability Framework. So it's a standardized assessment toolkit. It's available for free, focusing a lot on the budgeting process. And they basically start from the assumption that budget credibility and budget reliability is the most important aspect from the perspective of public financial management. Yeah? But that's the perspective of accountants and financial managers. Yeah? And I agree, if we now change the perspective towards the citizens, we can say, oh wow, very cool. So we received more services than they actually budgeted for. I think the major problem here is, if you don't kind of enforce budget reliability, you don't have finances under control. I think it's very important to make sure that the line ministries try to stick to this budget because and I think most importantly, because the budget is in many countries, and it's an act, so it's a budgeting act, it's a law. Yeah? So it's what you agree for as a political decision. And if we just change that and don't comply to that, we kind of undermine the fiscal authority or political authority who set the budget. So in Switzerland, I don't know how it works in Indonesia. In Switzerland, it's the parliament who sets the budget, and it is the ministries who are spending. Now, if the ministries exceed in spending, they kind of don't respect what the parliament actually defined and set as a budget. And I think in that sense, it is both, I think, a very important tool to showcase and demonstrate what you're doing, for your people. I very much like the New Zealand approach. They speak about the well-being budget, so they're really connected to services and to citizen well-being. So I really like that approach. But at the same time, it's a very, very important to kind of control the commitments and not to overspend, because you will undermine the authority of the legislative branch, which actually is responsible for the budget, for setting the budget. So I think there is this trade-off. Yeah. But I would recommend to look into PFA, because I think they have the standardized assessments on how to kind of assess, and assess the budget credibility of governments, public sector entities. But very, very good question. Yeah.
Any other questions?
Friday afternoon,
Yeah,
1 week before exams.
Oh, this is actually the last day of the
last
semester.
day, yeah.
Last day of the semester.
Yeah.
So we're celebrating with having you here. Okay.
Okay, so I need to stay with from the speaker. We need to stay with from the speaker. Okay, so yeah. Okay, so you have to.
Good evening. Good afternoon, everybody. My name is Grace Lin. Thank you for your insightful presentation. I want to ask, in the field of public finance, policy making plays a crucial role. While successful policies are often highlighted and celebrated, understanding the reason behind policy failures can offer equally important lessons, given that such failures are often less visible or formally documented. What approaches would you suggest for policymakers and us, the researchers, to effectively identify and reflect on these past policy shortcomings? Thank you.
Thank you for the question. I would like to hand over the question to Alma because she's our expert in evaluation. I think that would be my answer. I think continuous learning would be one answer. Of course, trying to, policy failures can always happen. Yeah, I think there is also this tendency that governments tend to be very, very risk averse. Yeah, they don't want to make any failures because then everyone is pinpointing towards the government you made a failure. Yeah, I think in my view governments should actually be way more increase the risk appetite in a way. I think there is a huge amount of literature stream, Mariana Mazzucato kind of going into the direction of how to increase risk appetite of governments to kind of step in and to kind of be more proactively engaged in also delivering change and not just fixing market failures. But I think that does not really answer your question. I think your answer was way more practical. So how to deal with that? How to deal with policy failures? I would say evaluation is very important, understanding what worked, what didn't work, and then trying to learn from it. That would be my initial answer. But Alma, she's our expert in policy evaluation. She teaches classes in that, so maybe you have a better answer than I have.
Not a better answer, but I think I can add to your answer. So policy evaluation is definitely very important, and it's also, I'd say, highly encouraged, at least in Switzerland. We do a lot of evaluations. But I think what is often missing, and I think that relates to your question, is that even though we do evaluations, we often don't really learn from them, in the sense that, policy makers, they don't really like to see failure or admit to failure. So when there are evaluations being done where the outcome is not as desirable as the policymaker would have wished, these kind of results often tend to be kind of swept under the carpet. So, I think it's very, kind of the successes, they're always like very pronounced and are visible in a sense, but the failures not so much, because this is not wanted from, kind of the side who, like the policymaker side. So I think to actually go or make kind of like a setting where we can actually actively learn from that and have sort of like regulations is very important. So we do have them in Switzerland, for example, where we, have certain standards on evaluation, how they should be conducted, and also what has to be done with results consequently. But there's often a big gap between theory and practice. So I really like your question, and I think it's highly relevant. And I think, as in many other settings, we really do not learn enough from failures, in the sense also we often don't take into account, for example, externalities that are there. So we might have a policy where we have a lot of success, but we also have non-desirable outcomes, and then we only focus on the one side and not the other, and we tend to really focus, have a limited focus on that. So yeah, it's a really good question. We can talk more maybe after. I have a lot to say about that, but I think I stop here.
Thank you. Any other questions?
I know the time's running out, so maybe one more question. Anybody want to ask something? So maybe, so Sandro, I know you have not just plenty, but like abundant experience in like publishing papers, writing maybe policy papers related to public financial management. So the idea here is for the students to do research and, you know, if they can publish the research, that will be definitely great. So if, let's just say, we have these young researchers who's going to do public financial management, so what advice you can give them? So what's the international academics are looking for, especially if the research is about like Indonesia? So maybe you can give them like a perspective, what basically academics are expecting, so maybe hopefully it will kind of inspire them to do research in this area.
Of course, I mean, first of all, I think Indonesia is a great country context, and I think very, very suitable and feasible to publish also good papers. Yeah, I think one advice would be, I think methods are very important. Yeah, to have sound methods. We just had a very good discussion yesterday evening. I think the research method is important, but, you know, as important is kind of having this contextual and this feeling to understand and kind of derive, you know, clever research questions. And, you know, for that, I would always advise, you know, if you have an idea, you know, do not rush into formulating a research question. Do some literature review. I think there is very, very likely that many papers are already being published, maybe in different country contexts, maybe in slightly different methodology. And then deriving, you know, and developing a research question by kind of highlighting what is the research gap and the contribution you make to the community. And then I think, you know, anything goes in terms of methods, either qualitatively or quantitatively. But what we see is, you know, at these conferences, there is a lot of, you know, PhD students, they come with very, very fancy quantitative methods, which is fair enough, which is okay. But you kind of recognize they don't really understood kind of the context, what they're dealing with. Yeah. So I would first begin trying to understand the context, you know, developing a kind of a clear research question, and then think about the method and not vice versa. That would be one advice. But again, I think there are different styles on how you can actually approach. But I think Indonesia is very, very well suited, generally emerging markets or emerging countries to do publish. And I think we have a few very nice journals in the area of public financial management. So we have Public Money and Management, we have Public Accounting and Budgeting journal of Giuseppe Grossi. I think, yeah, there is a lot of also very nice journal. I think generally, I think we have a very nice community, very friendly, compared to the economics or economic colleagues. I think there is good chances to publish.
Okay, thank you, Sandro. So I hope that inspires all of you that, you know, it's still like plenty of possibilities to publish research in public financial management using Indonesian context, right? Okay, so I think let's just give a round of applause once again to Sandro. Thank you so much for being here. So I think hopefully, you know, even though I know there are mostly like accounting students, but I'm looking for students that are interested in this area, and I'll share the slides with all of you after this presentation. And I think maybe if they have some question, then, you know, we can definitely address that to Sandro. Okay, I think that's all for our Friday afternoon, last day of class.
Definitely enough. So.
And thank you so much for everybody for being here, for your participation, and we hope to see Sandro, Alma, and Lucas back again someday in the future. And maybe at that time we'll have more discussion about your research ideas. Unfortunately, we don't really have time for that right now, but, you know, hopefully in the future we'll be looking forward for you all to come back. Okay, thank you.
Thank you, Yulian. Thank you all, and good luck with your exams. Have a nice weekend. Thank you very much. Thank you.
Oh, okay. Oh, okay.
So we have the new head of the department, so the head of the department is like joining us through Zoom. So maybe Ibu Desi want to say something or want to deliver a closing remarks. The time is yours. How should we proceed with this?
Oh, okay. Okay. So Sandro, we actually have something for you. Our token of appreciation.
Thank you. Oh, wow. Thank you so much. Well, very nice. Yeah, this will have a special place in our office. Yeah. We have open space office, so
Oh, okay.
we'll clearly demonstrate it's going to be my place. If I put it there.
So nobody can sit
Thank
where
you.
yeah, we still put it.
Yeah, thank you.
Another one.
Oh, wow.
Yeah, hopefully you have space. Okay, so you remember this like the E sign?
Ah, yeah, very nice. Thank you so much. Thank you very much. Thank you. I appreciate it. Thank you.
Yeah, I don't think she can. Yeah, I don't think she can.
Okay.
Like, yeah, so that's fine.
Okay.
Okay. I think usually we're going to take a group picture, right? So before we are done, everybody please like move around and we'll take the group picture.